Hi, everyone. Today, let's go over the big earnings of the day. We have Microsoft and Google. Then we'll go over all the relevant calendars for tomorrow. Then we'll get into the charts. Then we'll go over my results and my positions going into tomorrow's session. Don't forget to check out the Patreon and the Twitter. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So the bottom line for earnings today is the big players crushed it. So Microsoft beat on earnings and their cloud growth came in a little bit better than expectations, as it only slowed to 27% growth from 31% growth. And like I said, they beat on the top and bottom lines. Looking at earnings per share, $2.45 compared to $2.23. Beat on revenue by more than $1 billion. Everything continues to look very good. Revenue up 7%. Net income also up $18.3 billion, which is a 9% increase. Everything for Microsoft continues to do very, very well. This is a juggernaut of a company, and I don't know if I've ever really seen them deliver bad earnings. And this is just another iteration in their very good earnings deliverance. And they were really fading during market hours today, which was interesting. And then here after hours, they jumped up pretty substantially. Moving over to Google, they also did very well, but the biggest thing here is that they authorized $70 billion in share buybacks. This is a huge amount of money, and obviously this is going to prop up the share price. And they also mentioned that they are cutting costs through a weak ad market. Earnings per share, $1.17. Revenue beat again by just under $1 billion, pretty good. YouTube advertising, slightly better than expectations. Cloud revenue, basically on par here. And traffic acquisition costs, basically on par. So everything pretty neutral, but like I said, that $70 billion buyback, that's a huge thing. And that's going to prop up the share price, at least in the short term. And then lastly here, they continue to talk about layoffs. They're laying off about 12,000 employees, which is about 6% of their workforce in January of this year. Moving over to the economic calendar here, you can see building permits came in better than expectations. Consumer confidence worse than expectations. But the big one here was new home sales. New home sales came in at 9.6% versus 1.1%. Much, much better than expectations. That was a big heavy hitter, big surprise here in the markets. And it's also worth noting that home prices went up as well. So home prices have begun to rise again, and new home sales also accelerating here in March. And the interesting part is, as a result of some of those factors, you can see we actually got a pretty substantial decline, 88% yesterday, down to 70% for another 25 basis points at the May meeting. Everything being a little bit better than expectations kind of made me think that this was going to pretty much lock out at 100% here pretty soon. We're a little bit more hesitant at the May meeting, but still likely to get that 25 basis points either in May or June. And then once we get that 25 basis points, you can see once we get down here to September, we're expecting to be back at the same rate. So we're looking for that first cut in September, assuming that we get the 25 basis points in May or June. And I do want to bring up here the M2 money supply. So we talked about that step down in percent chance of a 25 basis point hike. But you can see the M2 money supply has been contracting, and we've talked about this before in terms of rate of change from a year ago. And this is another good indicator here that the money supply is continuing to contract. So the March numbers for 2023 was minus 4.05%, which was a significant step down from the previous month. So money is continuing to contract faster than we've seen recently, which is faster than we've seen really. So they mentioned here the M2 money supply hasn't contracted in nearly 90 years. We've talked about that on the M2 money supply chart. But now we're seeing that come to fruition where the M2 money supply is pulling back dramatically. And when there's less money to be invested, it makes it tougher for the markets to be more expensive because, of course, the markets are based on the amount of money that people are willing to pay. And if there's less money in total to be invested, then the market will likely be cheaper. Moving over to earnings for tomorrow, you can see Meta, the big player here for tomorrow. We also have Boeing in the morning, American Tower in the morning. That's pretty much it here for Wednesday. So not a huge Wednesday, just Meta, always an interesting one. I would expect that they're going to do a little bit better than expectations since we saw cloud doing quite well between Microsoft and Google. But you never know. Definitely worth watching tomorrow after hours. Moving over to the charts here, starting off with the S&P 500 on the hour and the 4-hour. You can see we were chopping sideways for many days here on the SPY. And then here today, we gapped down and then fell super aggressively, getting all the way down to 406 on the day. And then you can see we popped up here after hours because of the very strong earnings reports. You could also argue that we were pretty oversold here, and now that a little bit of that fear is out of the market, now we're seeing what's going to happen going into tomorrow's session. In terms of the channel that we were watching, you can see we were coming down in this channel very cleanly, found support at the 200 on the hourly chart, came out of here just briefly, looked like a slight breakout, and then we broke down all the way below that lower trend. And like I said, looks like we're getting a little bit of a bounce here on earnings and potentially just being a little bit oversold. Huge volume at the end of day makes sense with the big earnings. Overall, still super bearish, but you have to be a little bit cautious with that pretty good earnings on Microsoft and Google. Moving over to the NASDAQ, similar thesis. We were going sideways, but we were below the 200 here on the NASDAQ. You can see we hit that yesterday and got a big sell-off, found a rally into the midday right up until the end of day. But then with that gap down, and then we had the break of the 313.92 level, we came all the way down to the 310.80 level, tested that lower bound from that channel that we were watching, also hit the 144 EMA here on the 4-hour chart. And now we're right back into the middle of this range, holding pretty solid in that zone. Big bullish candle, obviously, on earnings, big volume at the end of day. We'll see if this has any follow through here. Definitely tough to tell because we are definitely downtrending. We took out that midpoint and it looks like we're retesting that midpoint here now. So this certainly could be a breakdown, retest, continued to breakdown type situation. But it's hard to tell because of that strong earnings. And earnings can definitely reset the balance and change the trend to where it looks like we're going to be a little bit more bullish because earnings are starting to come back a little bit better than expectations in most cases so far. Moving over to the Russell and the Dow, very different thesis here. You can see the Russell absolutely collapsed here today, gapped down, fell super aggressively, went from about 177.33 down to just below 173. And we don't have any major support here. You can see a little bit of support where we're at, but realistically, I expect this to come down to 171.64. So very bearish, momentum super bearish, RSI super bearish, definitely looking for lower prices here on the Russell. Moving over to the Dow, very similar thesis, but definitely in a stronger position. Huge red bar, lots of volume, bearish momentum, but we're at the 21 EMA on the daily chart. We also have VWAP slightly below where we are at 334.56. So about 50 more cents of downside, 75 more cents. Hit that level, maybe we see a bounce from there. We did take out the 335.91 level that I was watching. That was the high from this previous consolidation. If we come down and test the lows from that consolidation, that's about 333.55. So maybe we see a little bit more follow through before we get a little bit of a bounce. Nothing goes straight down, but momentum and RSI are still super bearish here on the Dow. Moving over to Apple and Tesla, Apple continues to hold up quite well despite the pretty negative technicals. Momentum bearish, RSI definitely bearish, below all the EMAs and SMAs besides the longer term averages. And you would expect this to continue lower until we hit that 144 EMA, at least in my opinion. It also coincides from the lows with this kind of double top pattern. So overall, looks like it's going to break down in my opinion, but it continues to hold up quite strong. Obviously, we're not at earnings yet for Apple, so that is a factor, but overall bearish on these technicals. And then looking at Tesla here, also a little bit surprising to me. So I kind of expected this to get a bit of a continuation, which it did a little bit, but then it found a bounce early in the session, hit the 9 EMA and VWAP, and then sold off into the end of session, and then bounced here after hours. So huge move down, still definitely bearish on trend, but momentum did turn slightly bullish here at the end of day on the 4-hour chart. RSI making some higher highs, especially compared to these higher prices that we saw going back to 20 and 21 April. Maybe it's due for a little bit of a pullback. Maybe we hit 167.34. That would be interesting. Retest the 21 EMA, and then we get a bigger sell-off. But looking at the way these EMAs and SMAs are aligned, this is super bearish in my opinion. And even if we do get a bigger pullback, I would expect that to be met with sellers and then eventually get that bigger move down to fill the gaps that we talked about right around 144. Moving over to Microsoft and Google, the big heavy hitters for the day here. You can see Microsoft You can see Microsoft going much higher on that earnings announcement. It was fading super strongly over the last couple days. We've been talking about it. Hit the 144 EMA, came all the way up to that resistance level, hitting those highs. Now we'll have to see what happens, right? So technicals still bearish in the short term, but remember, earnings can kind of reset the playing field here. So if we expect Microsoft to continue to do well, they put out good guidance, this could certainly have some follow through to the upside. That would be interesting. Similarly here on Google, pretty much everything was in line with expectations. Threw huge wicks to both sides, took out the highs and lows here previously. Now we're still kind of in that same range, below the highs going back to 14 April. And generally, you would expect this to kind of grind higher based on those stock buybacks. That kind of puts a floor underneath the stock. Obviously, $70 billion is not going to shift this market dramatically, but it does kind of put that backstop behind the stock. If this sells off too much, you would assume that the company is going to start buying back some of its shares to help prop up the stock. So overall, not terrible. Probably would have less follow through in my opinion compared to Microsoft, but still pretty good situation here on Alphabet. Moving over here to Amazon and Meta, we have some sympathy cloud plays here. So you can see these were both selling off pretty dramatically. Amazon had a pretty strong top and then a big follow through here down to the 55 EMA on the 4-hour charts. But now after hours with Google and Meta turning in good cloud numbers, Amazon's big growth driver is cloud, and that's expected to do well now here. And you can see similarly with Meta also showing some strength after hours. But of course, Meta has its own earnings tomorrow, so we'll see if that's true. Certainly could be false here for Meta, and we see this continue to break down. But right now, the sympathy play is definitely happening. Moving over to Etsy and LULU, unfortunately, these broke down here today. So I was watching this 150 level, and you can see big bars here through that level. My guess is this is because consumer confidence is continuing to go lower. Talked about that earlier. So this play is kind of out the window unless we get back above 150. You can see this wedge is still somewhat intact, and we could retest this lower bound and then we see a breakout. But right now we're still being patient here in this zone on Etsy. LULU also showing some big bars to the downside below the 21 and 9 EMAs, as well as VWAP here on the 4-hour chart, and that major trend line that we're watching. So overall, this is looking like more of a pullback type scenario on LULU. And you can see this huge gap that was left behind on earnings. And it would make sense that we might see a little bit of a pullback to these major averages. And then we see a little bit of follow through based on their strong guidance that they put out during earnings. So unfortunately, a little bit of a pullback here. Maybe we get a bounce at the 55, but overall, still being patient here on LULU. Moving over to staples and discretionary, unfortunately, staples came up a little bit short of my price target, ended up throwing a big pin bar here, which is generally a bearish candle. Means some sellers came in and pushed the price back down, which ended up being an inside day here for the previous candle, definitely bearish. Momentum fading, RSI was overbought and starting to tick down here now. You can see a pretty decent step up in terms of volume, and that was definitely bearish. So staples having a little bit of weakness. You can see it's actually falling after hours, which is definitely weaker than we've seen recently on staples. Might come up a little bit short on that price target and start to see this roll over, but it's been a pretty good run. Otherwise, looking at discretionary, it did break down in terms of this pattern that we were watching. We had the triangle, broke down to that next level of support. If it breaks that level, then this looks more bearish in my opinion. 200 SMA on the 4-hour chart holding up prices as well, but we are below all of the other EMAs, VWAP, so definitely bearish. We're also out of the supply zone, and I would expect this to continue lower here on discretionary. Moving over to energy and oil and gas, I just want to hit this one real quick because we did have a pretty decent sell-off here today. So yesterday, we actually had a big rally. Energy doing a little bit better here than oil and gas. But then here today, oil and gas made a new lower low, looking at 124.13 as my next level of support. That's the midpoint from this double bottom before we moved into that rally. Looking to see if we get a bounce at that level. Energy, on the other hand, continues the 200 SMA here on the 4-hour chart. Still below the 9, 21, and 55 EMAs, so we're kind of trapped in this range. But remember, we have big oil and gas earnings on Friday, so pay attention to these. It does look like we're selling off into earnings, and I would expect that to continue on oil and gas. Energy sector as a whole does look a little bit better here in the short term. Moving over to transports, what a day, what a huge move. So we were sideways for 2 days, hit that resistance. You can see we were at resistance on the daily chart. We were waiting to see if this broke out, but then that definitely didn't happen, and we had a huge gap down and move lower down to that next support line. So we talked about this being a critical zone, ended up gapping through all of those levels, fell through all the EMAs and SMAs, and now we're below everything here on the daily chart, hitting that support line and this previous consolidation zone. Definitely looks bearish here in my opinion. Big move on transports, and overall that should be bearish for markets. Moving over to semis, we finally got our big breakdown. So we were watching this head and shoulders, kind of drifted out of it, took out that low, and then we gapped lower, took out several levels, and now we're back into this previous consolidation. Huge move lower, down around 8 points, 7.83 points on the day. So big move lower, definitely broke multiple levels. Our next level for me is down around 229. Maybe there's some levels at this bottom of consolidation around 234, but with the velocity of this move, I would expect it to have some more follow through, big volume, big momentum. Everything looks bearish here on semiconductors. Moving over to the stocks above their 20, 50, and 200-day averages here, you can see they represent pretty much what we saw across the board here. Huge drop off, lots of stocks dropping below their 20-day and 50-day averages. And even the 200 had a pretty big sell-off here, taking out that support line that I was watching. 20-day also took out that same support line, very similar at 51.75. Momentum turned bearish on the 200 as well. 50 days, not quite there, definitely following suit now compared to yesterday where it kind of had a weird step up when everything else was moving lower. And you would expect this to have more follow through into tomorrow's session, regardless of the strong earnings. Moving over to yields, we got a little bit more of a sell-off. So everything's moving down here. Yields going down and equities going down at the same time. That's definitely unusual, but it makes sense when we looked at the Fed futures, which are drifting more towards that more neutral position. And that's being reflected here in the bond market. Momentum bearish on both charts. RSI crossing through the SMAs, generally indicating that there's lower yields to come here on the 2 and the 10-year. Moving over to the dollar on the hour and the daily, you can see a huge rally here today, back up to resistance, broke that level. It looks like we're retesting. If we get a continuation here, that's going to be super bullish here for the dollar. Momentum on the daily chart definitely fading, and we did get overbought conditions. So we could certainly see a little bit bigger pullback. That would be interesting, but super bullish here. We also have a higher low setup here, previous low, mid-April, new low down at support. We touched that level pretty much spot on, 101.25. Talked about that level yesterday. We've been watching it for quite a while, going back to this previous consolidation. Hit that level on the dot, rallied back up to resistance. We're at the 21 EMA on the daily chart. Again, if this breaks out here, that's going to be pretty bearish for equities, but certainly could see a small pullback. And I would expect that to be bought, and then we would get a continuation on the dollar. Moving over to JNK, we're selling off from resistance. Makes sense. Markets are selling off. JNK selling off, confirming that down move. Momentum on the hourly chart, very bearish. Step down here on the daily chart. If this continues lower, we should get bearish momentum tomorrow. I'll cross the SMA, and then we'll definitely be looking for a bigger move down here on JNK. Again, confirming a potential move down in equities. Moving over to TLT on the 4-hour and the daily chart. TLT is back on a run. So we had that gap down, island reversal type setup, rally, and now we're continuing higher here. Makes sense because yields are going lower, TLT is going higher. Momentum continues to move bullish. We're back above the 200-day moving average, and you would expect this to continue to these previous highs before we get any kind of slowing, in my opinion. So TLT looking very bullish going into tomorrow's session. It is showing a little bit of weakness here after hours, but overall, all the indicators are still bullish. Moving over to the VIX here on the 4-hour and the daily, you can see huge move higher, took out all these levels. We closed above the 1850 level, got very close to 20. Overall, the VIX is accelerating upwards here. You would expect follow through. Momentum also turned bullish. RSI, big move higher here. And it does seem like we're going to get a pretty decent continuation, similar to what we saw going back to the beginning of March. I don't know necessarily that we'll get up to 27, but I would expect, but 22.5 does seem like a decent level, especially since we already got to 20. Might take a few days, but overall, I'm expecting this to go higher in the short term. Moving over to my results for the day, I actually did fairly well, and I was positioned really well for some pretty mediocre earnings, but then we got some really strong earnings, and I'm in a little bit tougher spot here. So I had some 312 calls going into the close, and you can see I had 32 cents credit on those. And now the market is at 312.77. So I'm going to get a sign on these calls. I'll have some short shares going into tomorrow's session, which is not awful. I do have 2 puts here at 312 for $1.50 credit. I did roll those out in time, which does protect me to the long side a little bit on these short shares. We'll see how that plays out. But if the market continues to rally, I'm going to be in a tougher spot for sure. I have quite a few calls going into tomorrow's session. 316 for 2, 317 for 2, and 318 for 2 as well. Most of these are in profit, and I expect to be able to take some of them off early in the session for profits if I need to. I don't think we're going to go that high that fast early in tomorrow's session. Certainly anything is possible. Maybe we get a huge follow through on Microsoft and Google, but it doesn't seem like that's going to happen. And then here on my IRA, I actually finally had enough money in this account to take a QQQ position, so I can start doing daily options there. Got a 308 put at $14 profit, 50 cents total for tomorrow. I'll probably roll this up early in tomorrow's session. If it goes too much higher, I'm not going to be able to continue to trade it. You can see I only have 31,000 here. So I'm trying to trade 100 shares, which is now at 312.70. So we'll see how that plays out. I might try to do a covered call tomorrow just to try to get a hold of those shares and see how it plays out. Otherwise, I'll roll up this put and continue to try to trade the Qs in that account. But overall, I'm still neutral. I think we're probably going to get more follow through to the downside, but Microsoft and Google going higher on earnings definitely makes it a little bit tougher because that will pull names like Meta and Amazon higher as well. And those are pretty much all the big names in the market. So if those companies are going higher, that's probably going to pull the NASDAQ with it. And that makes it a little bit tougher to be bearish in tomorrow's session. So I might have to readjust those positions. Let me know down in the comment section what you thought of Microsoft and Alphabet. Are they going to have follow through to the upside, or is this just going to be a short-term retrace and then we're going to get a continuation to the downside? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.